Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Sean Brodrick, editor of the Wealth Megatrends newsletter and contributing analyst to Weiss Ratings Daily. Now, Sean, just a broad comment here on the markets because we have seen a pretty nice rebound almost across the board in stocks throughout this month of November after what was kind of a continued breakdown, about 2 to 3 months of a downtrend here. A lot of people are pointing to maybe some weaker economic data, the Fed being done with rate hikes. But overall, Sean, what's your takeaway from this market bounce and where you have been focused on, please?
Right. Well, I do believe that the Fed, or I should say the market anticipating an end of Fed rate hikes. That's what's really one of the factors driving market higher right now, and that's also pushed the U.S. a dollar lower. It's into a new downtrend, which is good for precious metals, stuff like that. But how I'm playing this broad rally that we're seeing in the markets, well, I have uranium, of course. I mean, but that would be rallying, I think, whether the broad market was actually rallying or not. I also have what I call my reindustrialization of America stocks. That's everything like Emerson Electric, Terex, a whole bunch of stocks, Caterpillar. These are stocks that are going to do well as more money is invested in American industry. And in fact, what we're seeing now is this is the first time in 40 years that the US economy is growing faster than China's. Part of that is due to like companies investing in new factories and stuff in the US. I mean, it's not everything, but it is part of it there. And so that overcomes things like the fact that home sales have like plummeted, stuff like that. It's really turned the market kind of topsy turvy. But I think if you look for areas of growth, you can do well. I'm into things like cybersecurity, for example, drones. There's a bunch of things that are doing very, very well. And so you have to pick and choose, though frankly, the S&P 500, if you buy the whole thing, it's doing well, dragged up by big tech, though. You might want to emphasize that. But the S&P 500 is doing well. And I think that we're entering a period of growth that the way things look now should at least go through the first quarter. And we keep hearing calls for recession and talk about the leading economic indicators. But you know what? The leading economic indicators predicted a recession in the last quarter of like 2022, in the first quarter of 2023, in the second quarter of 2023, on and on. The leading economic indicators, I don't think, are set up for the environment that we're in right now, which is, a bit different. We are back where we have actual real interest rates. This has been kind of mixing things up in the market. We also see strong global energy demand. This is part of a growing global economy. Now, oil stocks have been down recently, but overall this year they're up quite nicely. So I think there's a lot of things you can pick out there that are actually doing pretty well. And, that's kind of what we're doing now. There are some things that I thought would be doing well that aren't. Lithium, for example, my lithium stocks are not doing well. But overall, I'm actually quite happy with how things are going.
Well, Sean, just to tug on that thread a minute, when you talk about some of the sectors you're looking at, like let's just say the drones or the reindustrialization of America stocks or some of those cybersecurity stocks, it sounds like when you look at the upcoming year, you're far more optimistic. We've had a couple people on the show in the same boat that are pretty optimistic about the direction of the general equities, that a lot of sectors that have been beat up for the last year or two are bouncing, and they're not as concerned about recession. Is there anything that would concern you, or what would you be looking for where you may get more concerned we're going to have an economic contraction next year?
Well, one thing I have been watching is global shipping rates, which have been coming down quite a bit. And that can normally be a leading indicator for recession because people just aren't shipping goods around. But maybe the shipping rates are coming down simply because they got so high during the pandemic when we had the real imbalance in like supply and demand. So I'm not really sure. That's one thing I'm watching. I'll also be watching copper use. Really, that can kind of give you a clue as to what's going on with industrial metals. And I guess oil prices. I mean, if oil prices get below 60, then I'd be pretty sure we're having a recession. They aren't. They're actually doing quite fine. I mean, at the price they are now, a lot of great companies can really make money. But if you look at, say, copper, we've had a nice rally. It's an overhead resistance. I'm not expecting a breakout during a holiday week. It's really light volume. I don't expect big moves one way or the other. But the setup in copper looks quite bullish. Copper takes the temperature of the global economy. So, looking at that, I think, yeah, we do have that bullish setup.
What about looking at the US dollar too? That's gone through quite a correction this month, and some people are now saying that the US dollar could be in a bear market. How does the dollar trading all factor into your strategy and also the bigger picture on the economy?
Well, what moved the US dollar? Well, there's a couple things. So I shouldn't say just one thing, but one big thing is the market's anticipation of what the Fed is going to do. Now, the general anticipation is the Fed isn't going to hike. There are some people calling for cuts. I'll believe that when I see it. In fact, it wouldn't surprise me if the Fed doesn't cut the first half of 2024. But that's one thing. The other thing is that the U.S. economy was really outpacing other global economies, and so everybody wanted to invest here, so they needed U.S. dollars to do that. And so that was another thing that was actually pushing things up. We still have that, but we don't have the Fed. And so if you look at a chart of the US dollar index, it is definitely going into a downtrend now. It really is. I think it could go back and it could test the July lows, and that would be very bullish for precious metals. As you and I talk, gold got up to the $2,000 level. That's usually a place of overhead resistance. It'll take some time to get through that. Wouldn't surprise me to see gold and silver go down next week, but I think that might be the opportunity to buy, because if the US dollar is going to zigzag lower and back and test those summer lows, then we're looking at a great Christmas for precious metals. And so that could work out very well for a bunch of stocks I like.
Well, Shauna, I don't think anybody listening will be opposed to a great Christmas for precious metals or the precious metals equity after getting beat up a lot of this year. But you brought up energy and a couple of different sectors there. I know you follow that space very closely. You kind of alluded to how you feel about oil and the oil stocks, but you brought up lithium, you brought up uranium. They're kind of a tale of two stories right now, where lithium has pulled back a lot. Is it a compelling opportunity? And uranium has really run a lot. It's rolling over a little bit, but has it maybe run its course? How do you feel about the lesser energy stocks of lithium and uranium?
Those are two very different stories. While I'm not buying uranium stocks right now, we have added a bunch to the resource trader portfolio. In fact, it's kind of overweight in that, but that's fine. We have seen a nice run in uranium and those stocks leveraged to it. I expect a pullback in the short term, but again, that'll be a buyable opportunity. I'm just not buying right now, because after this kind of run, you expect some kind of pullback. Lithium, I've been doing presentations. I think I've done 3 presentations in the last 3 weeks, and I mention every time I like lithium. I like certain lithium stocks. We own certain lithium stocks, but don't buy them now, because they really have to go through a real bottoming process that we haven't seen yet. And now we keep hearing these stories about, bad things about to happen in lithium. Sales are drying up for EVs in Europe. Well, that didn't happen. We're in fact seeing EV manufacturers expand to new countries around the world. It could be a supply demand thing. Maybe there's too much supply of lithium. I don't know, but I have to think there's been some destocking by those companies that use it to make batteries. That's really down the price. But if you look at the way demand is ramping up, then I expect things could be better. It's just I'm not a buyer now. Just to end with oil, because there was one thing that I wanted to say. I thought the oil price would be higher now, but it turns out that the Russians were cheating like crazy on their quotas, and they're not the only ones. About the only country that actually stuck to the OPEC plus quotas was Saudi Arabia. So now Saudi Arabia is blaming speculators, because they say speculators are driving the price lower. It's not speculators. It's the fact that all your friends are selling more oil than they should. There is an important OPEC plus meeting coming up. Russia has really cut its oil exports going into that meeting because they don't want to look like complete a-holes. So that going on, maybe the Saudis can pressure the Russians to stick to this more closely. I know why the Russians are doing it. They have a war to pay for, but what the Saudis can say is we can underprice anybody, and they've done that before. And like the Russians can't afford to lose that oil revenue. That would just kneecap them when they're in the middle of a war. So it'll be interesting to see what happens at that OPEC Plus meeting, and also how, and this is very important, how Russia behaves after that meeting. Does it start to stick to the quotas more strictly? Because right now it's not. And that's a big thing that has pushed down the price of oil. But I have to say it, well, for example, West Texas Intermediate is over, I think, $77 today. All the oil companies that we have in our portfolios, we don't have a lot, but we have some, they all make fantastic money at this price. And so what's happened with those stocks is the hot money has moved away from them. But as we move on to the next earnings season, they're going to be doing very, very well. So I'm not worried about oil stocks at all.
So, Sean, even some of the best sectors and some of the best performers, maybe outside of the uranium stocks, as well as the companies are doing, they're still largely range bound in terms of where they've traded over the last year to 3 years. How do you view this large range that these companies have set up? And do you play a breakout if you see any of them coming up to the upper part of the range? If you see a breakout, do you go in?
That is the $1 million question. I've been trying to buy breakouts all this past year, and more often than not, I've had my fingers burned. It does seem like the market is range bound. However, if the S&P starts to zigzag higher, and remember, it has been in a bear market. It was in a bear market from like July through October, which was a terrible time. It really was. But if it's done with that, if it starts to zigzag higher, then you can buy breakouts. That'll work just fine. And I am turning more bullish on the broad market. A lot of this, again, has to do with the US dollar and also anticipation of what the Fed is going to do. The Fed seems to be really behind the ball. As you and I talked, the minutes of the last Fed meeting came out. They all seem to be worried about inflation heating up again. I'm not seeing that in any of the data coming out. I'm not seeing inflation heating up again. So I'm not sure what they're looking at. But the Fed always seems to be fighting the last war. So maybe that's the problem. So I guess I'm expecting the market to rally despite the Fed. I don't expect the Fed to make any major rate cuts. I expect them to hold rates steady, higher for longer. I don't expect them to hike rates, though, either.
It does seem like they're going to continue to unwind that balance sheet, though. So how that all plays in, we will see. But right now, it does seem like we're on a long pause for most central banks, and everyone's waiting on those rate cuts. Who knows when they'll come, but consensus right now is they're coming next year, and there might be a few of them. Sean, thank you so much for your time. Always great chatting with you. We'll touch base in another couple weeks. I hope you have a great rest of your week and a very happy Thanksgiving.
And a happy Thanksgiving to you and yours as well.